Welcome to another weekly stock market update. Today is November 16, 2019. Is the market telling us a correction is coming soon? We're going to take a look at the market internal to see exactly what they are telling us. Last week, the stock market continued to make new high. And looking at this long-term chart here, this is a 20-year monthly S&P 500 chart. As you can see, the price is still in the upper portion of this megaphone price channel, extended from the low of 2009 on up. And I also have a Fibonacci retracement with an extension of all the way up to 300%. Start from the high of 2007 to the low of 2009. It not only retraced this drop completely, it also extend its upward move by over 161.8% of this swing down. So is this market going to continue to march up without any sort of correction? Let's zoom in and take a closer look at the price action. Last week, the S&P 500 closed with a solid bullish candle and closed at a new all-time high. You look at this price action here, it's basically been one-time framing up for the last 6 weeks. What do I mean by one-time framing up? Well, if you take a look at the successive candle, the low is higher than the previous candle low, and that's what we call one-time framing up. Although the high doesn't necessarily have to be higher than the previous high, but it does put in some more significant if the high do take out the previous high. So essentially get a higher high, higher low, and that's what we call one-time framing up on each one of these candles. And in this case, this is a weekly chart, so you can see that in the last 6 weeks, it essentially just put in a one-time framing up. So the last 3 weeks, it essentially put in a new all-time high. Looking at the daily price, you can see that the last 2 weeks is essentially just grinding up to a new high. And it is getting close to this 50% extension of this balance area or this consolidation zone. Remember we talked about this for the last few weeks about this balance area, and it's been chopping around and then finally it broke through to make a new all-time high when it got above the 3,027.98. There's two scenarios that we still remain watching. Is one for this thing to pull back and come back down and back test this 3027.98. And at that point, we'll keep an eye to see would it be able to come back up above that and move to a newer high, or it will come down and try to get back above it, but unable to do so. Then we're essentially looking for this market to retrace back all the way to the other side of this balance area. One of the balance rule is if it break above the balance zone and come back in and then unable to get back above it, then we essentially are looking for a retracement of that balance zone. So far, all the price action that we looked at are telling us that the market wants to go higher. The price trend is trending higher. The moving averages are pointing higher. So nothing there in the price action is telling us that the market is getting ready to correct. But let's take a look at the market internal and see what they are telling us. For those that are not familiar with the market internals, it is pretty much like the human vital signs. When we go to a doctor's office, the doctor will get a state of our health by taking the blood pressure or pulse and our temperature to see are we healthy or not healthy. And it's the same thing, these market internal essentially gauges the market strength. Is the market getting stronger or is it getting weaker? That's the reason why we want to look at these market internal to get a state of the market. Here's a chart of the S&P 500 on the top here and the New York Stock Exchange cumulative advanced decline. This is what we call the AD line. As you can see, I have marked off all the area where there is major high, essentially the new high. And we could see similarly on the same region where the S&P 500 made its high. Also, we saw that there is a negative divergence on this AD line. And the latest one here was the recent high. You can see the recent high been climbing and with an ascending pretty steep slope. And look at the advanced decline and it's pretty much flat. It is down slightly because Friday's advanced decline value is actually somewhere around less than 100 lower than this particular peak here. So that is a negative divergence. A lot of time, these advanced decline or internals, they don't give obvious sign. It's very subtle. So you really have to monitor closely to see that divergence being established. Here's another market internal chart. This one here is the new high, new low. Basically, it's a difference of the net new high and the new low. And here's the S&P 500 daily closing price. So you can see I also mark off the similar area where there's some major high, and you can see that the new high, new low is also giving us the sign that the market has a negative divergence with the new high, new low at these major market top. So you can see right now we got this negative new high, new low, while the market is making almost continuously new all-time high. So these are the two vital signs of the market internal that's kind of flagged to us that the market is actually getting weaker internally. Even though on the surface the market is making new high, price action is pointing that the market wants to go higher. But the internal, the sign that said the amount of participant, in terms of stock, that pushing this market to new high is getting less and less. And also at the same time, there is less and less number of stock that is making new high versus number that is making new low. So that tells you the market is getting weaker. Now, how soon this correction will come, we don't know. But it's certainly pointing that it's going to be sooner rather than later. Let's take a look at the NASDAQ 100 20-year monthly chart. You can see that the 2007 to the 2009 drop, it wasn't anything comparable to the Y2K drop from 2000 to October 2002. So what I did is I put in a Fibonacci extension from the high in 2000 to the low at 2002, extend that up, and you can see that the price did not recover or recoup all the loss from the Y2K bubble burst until 2016. Then it continued to move up and extend all the way up beyond the 161 extension, which is above the 7,300 level. Then it pulled back and tested the 127 extension somewhere near the 5,910. And now it seems like it is extending up and making its way up to the 200% extension somewhere around 8,837 area. And if we zoom in to the weekly chart, you can see last week it also closed with a solid bullish candle at all-time high. And similarly to the S&P 500, it's been one-time framing up for the last 6 weeks. And ever since that broke above this prior all-time high at 8,033 area, it has been making 3 consecutive all-time high on a weekly basis. And on the daily chart, you can see that it's continued to grind up. And what I did is I also, similarly to the S&P 500, I put in this balance area and extend this the depth of this balance area up to get some sort of a idea of where are some of the potential level. And right now it seems to be hitting this 50% extension somewhere around 8,319. And if it continue to move up, we probably will be keeping an eye on the 161 or the 618 level around 8,388. And the 100% extension will be 8,611. There are 2 scenarios that we are watching. Both of them require a pullback to the prior high to this level at 8,027. Then similarly to the S&P 500, we're basically looking for to see would it be able to break back above that and then extend it up to a higher high. Or if it pull back and come up and back test this prior high, the 8,027, and fail to get back above it, then we essentially are looking for a retracement back to the other side or the lower end of this balance zone, which would be somewhere around 74.42 or 73.56 area. So that's basically, these are the scenarios that we've been watching. So once again, the price action seems to be pointing toward a higher level for the NASDAQ 100. You can see this 50-day and 200-day moving average is still sloping up. Price is way above the the 50-day moving average. So there could be some sort of reversal to the mean back to this 50-day moving average area, and that would provide us this possibility of back testing this prior high somewhere near the 8,027 area, or even come down to this trend line here and get it bounce. Let's take a look at the market internal for the NASDAQ 100. Here on the bottom of this chart is the advanced decline line, and the top is the NASDAQ 100. Similarly to the S&P 500, I basically have highlighted all the major high on the NASDAQ 100 and the AD line. But there are negative divergence within those major high. And on Friday of last week, as the NASDAQ 100 closed at a new all-time high, although the advanced decline did close positive, but if you look at the accumulative, the AD line is actually sloping downward. And looking at the new high, new low chart on the NASDAQ 100, you could also see, similarly to the S&P 500, there are negative divergence as the NASDAQ 100 is pushing to a new high. Look at last week's new high as it make a new all-time high. The new high, new low is actually getting less and less. So that's another sign that tells us that the NASDAQ 100 is also getting weaker. Yet there are less and less participants pushing this market up. Definitely the market internal is warning us that a correction could be coming soon. Once again, the NASDAQ 100 is in a parabolic mode. If you notice this climb here since the 2009 low, it is entering a phase of parabolic ascent. The S&P 500 has continued to move higher, and it appears that it is heading toward the 300% extension up at the near the 3,400. So as you can see, the price action from the NASDAQ 100 and the S&P 500, they both indicating that a higher high could be coming. But if we dig deep and look at the market internal, both of these market indexes internals are giving us a warning sign that a correction is coming soon. So be cautious and good luck on your trading.